In exactly 9 days, the High Court of Kenya is going to make a massive decision. They will be deciding if the government can go ahead with the biggest asset sale in the history of our country. The number everyone is talking about is in the news is 204 billion shillings. But that's actually the wrong number to focus on. The number you need to be looking at right now is 40 trillion. I know you heard me right. 40 trillion shillings is the amount of money that moves through M-Pesa every single year. Right now, the massive payment system is this massive payment is a 15% public asset owned by you, the Kenyan citizen. And the government is about to hand over that 15% to a private South African telecom company. In this video, we are going to look at why almost everyone is talking about this deal in the wrong way. Stay with me through the numbers, because the price is not the real story here. The real story is who controls the engine of our economy. My name is Agacho. I'm a real estate investor. I'm an African founder, and I am a voice of the next generation wealth creation in Africa. I talk here. The reason why I'm putting myself to do a lot of this work, a lot of this analysis, is not to inspire anybody or to create any manner of animosity. No, is to talk to you so that I can show you the hard truth and diagnose the system. What I publish on this channel is for the public record. It's pure data. It's real structure, and the serious conversations our generation must have if we want to own the next chapter of this continent's wealth story. Now, let us break down exactly what is happening using simple numbers. Right now, the government of Kenya owns 35% of Safaricom. Under the new deal that Parliament has already approved, the government is selling 15% of Safaricom to a company called Vodacom for 204 billion shillings. Now, on top of that, they are getting a 40 billion shilling advance payment against future profits from the remaining share of the government keeps. Now, once this deal closes, the ownership map of Safaricom changes completely. Vodacom will own the majority at 50%. The Kenyan government drops down to just 20%. Vodacom 50, Kenya 20. And regular Kenyan investors on the stock exchange will now own 25%. So you have government 20, investors 25, Vodacom 50. Now, who is Vodacom? They are a company registered and based in South Africa. Vodacom itself is mostly owned by Vodafone, a company based in United Kingdom. The government says that the cash from this sale will go into a brand new national infrastructure fund to build roads and projects. Hold those facts in your mind. 15% of Safaricom is leaving the state. Over 200 billion shillings is coming in, and a foreign company is taking majority control. This is not just a financial story. This is an architectural shift. I want you to see what is actually on the table. Can we take 1 minute to look at what Safaricom actually is today? In their just last financial year, Safaricom made over 371 billion shillings in revenue. Out of that money, M-Pesa alone brought in 161 billion shillings. That means nearly half of Safaricom's entire business comes from the mobile money product. But in reality, M-Pesa is no longer just a product. It is the actual railway that the Kenyan economy is running on. Think about it. 40 trillion shillings move across M-Pesa in a single year. Kenya's entire annual economic output, our GDP, is 15 trillion shillings. Are you seeing that? So that means that the M-Pesa network moves an equivalent of Kenya's entire economy through its system 2.5 times over every single year. There are nearly 38 million active M-Pesa users in Kenya. That is more people than the total number of voters who turned out in the last election. The system processes 100 million transactions every single day. The mama mboga at your gate uses it, the taxman uses it, your employer uses it to pay you your salary. Safaricom also pays over 162 billion shillings a year to the government in taxes and fees. It contributes roughly to 8% of Kenya's entire GDP. There is no other private company like this in Kenya. And honestly, nowhere else on the African continent. So when the government decides to sell 15% of its stake in this machine, the question is not whether 34 shillings a share is a fair market price. The real question is, what is 15% of a 40 trillion shilling national network actually worth to the country that built it? And this is the conversation we must have. Here's the blueprint you need to understand. When a government sells shares in a normal company like a factory or a bank, it's simple. You give up future profits, you get cash today, you check the math, you sign the paper. Finished. But Safaricom is not a normal company. It's a massive monopoly. And its main product, M-Pesa, has become the actual payment system of a sovereign state. Rent, salaries, taxes, school fees, and business deals physically move on the network every second. In economics, we call this critical national infrastructure. In security terms, it means a single point of failure. That 15% stake the government is selling is not just an investment, it is one of the last remaining control levers the state has over the data, the pricing, and the future direction of a private system that acts like a public utility. Think of this thing as a public highway. If you price Safaricom as just as a phone company, 34 shillings a share makes sense. But if you price it as the actual payment foundation of the Republic of Kenya, that price is completely wrong. Now, let me show you the bad math of this deal with one simple calculation. The government gets 204 billion, 204 billion upfront. In a country drowning in debt and facing huge budget deficits, that looks like a lot of cash. But now look at the profit side. Safaricom pays massive dividends to its owners every year. The 15% stake the government is selling brings in about 12 billion shillings of pure profit to the national treasury every single year. At 12 billion shillings a year, the sale price of 244 billion only covers about 17 years of profits. And that assumes Safaricom profits stay flat, but their profits have grown almost every single year. Kudos to Safaricom management. You are being asked to trade a permanent compounding asset that will pay the country for the next 50 years just to get one single check today. The asset grows for half a century. The check clears once, and the money gets spent inside a brand new fund that has no track record. Let us look at the strongest possible argument for this favor, because I know my government friends, this is what you will start saying. The case of Treasury and the IMF would make. This is the case. You know what they'd say? They'd say now, Kenya is trapped in a financial corner. Debt interest alone is swallowing trillions of shillings. The government desperately needs cash today, and they need cash that does not involve taking out new loans. This is the arguments. They will argue that selling a piece of Safaricom is safer than borrowing more expensive foreign debt. Plus, Vodacom has always been a partner. The CEO is Kenyan, and the data centers are right here in Nairobi. That is the argument, fairly stated, and it is completely wrong. It is wrong because it fixes a temporary cash problem by giving away long-term power. Owning 40% of a company gives you a massive say, but owning 51% means you have control. A majority owner can decide what happens to the customer data, how much to charge citizens for transactions, and where the profits go. Kenya is moving from the co-pilot seat into the passenger seat just to pay a temporary budget gap. Is beginning to sound like the man who sold his inheritance for a bowl of soup. I'm hungry today, give me soup. There are three things any independent country must keep under its own control. Number one, its energy grid. Number two, its data infrastructure. Number three, its payment rails. If you lose control of any of these, you lose your independence. Kenya already relies heavily on outside help for energy and data infrastructure. The payment rails, M-Pesa, were the one piece of national infrastructure where Kenyan state held its powerful seat in the cockpit. That is exactly what is being sold. You are trading a 50-year claim on the lifeblood of our economy for a short-term construction program. You are trading an asset that paid billions into the treasury this year for a one-time cash payout. And the government is rushing this through in the exact same year The High Court has had to step in because the public was not properly consulted. A 50-year, 40 trillion shilling architectural decision is being based on a single year's budget timetable. So, when the court makes its announcement and this deal comes back into the news, do not focus on the price tag. I want you to watch the architecture. 40 trillion shillings move on this network every single year. That is what is actually on the table. The check the government is receiving is worth less than 2% of that annual flow. Don't watch the price. Watch the architecture.